Hello guys, welcome back to the channel. Today is Sunday, and as we all know, Sunday we do top-down analysis and give you guys bias on what to expect in the market for the week. And today I have few pairs that I'll be doing top-down analysis for you to maximize your chance of winning in this week's market. So without wasting time, let's begin. Now, I'm going to just take a few minutes to go through the previous analysis, how it played out, which you could learn something from it before I give you what we have for today. Now, in my previous video, I explained all the reasons why the market will come to this place when the market was still here. I explained all the reasons why this internal liquidity needs to be taken out before we start seeing potential down movement. And remember the law of SMC, like so many people calls it, when the market is coming down, created this, and it created inside structure or inner structure before this break, external break of structure. The market always come back to take it out, coming to fair value gap or order block before you will start seeing continuation to the upside, because liquidity is what fuels the market to move to our desired direction. So that is exactly what the market has done here. And after the market took out this high, I explained all the reasons we should be expecting down movements from this particular place. Though the order block, we saw it on daily, right? Which I explained all the reasons we should be expecting the market to react from that particular order block that we are seeing there, right? And I explained to you guys why we should not be expecting, or why we shouldn't put our buy order there, our stop loss above structure, and targets this extend sell side liquidity, which is almost 3 to 1 risk reward. But with this, your stop loss will be much, right? And it's not a very good way of practicing risk management. So I explained all the reasons we should refine it. And when we went to 4 hours, we now saw a very good order block that we refined a little. Now, when you look at it right now, we have this order block there, and the order block is at least more heavier for our risk reward, which I explained all the reasons we should be expecting this reaction from this order block. And market did exactly what we explained on Wednesday. And when the market was still here on Wednesday, during our top-down analysis on Wednesday, I explained all the reasons that why you should not look for entry after the closure of this market, because we saw this market close during 5 p.m. and the whole liquidity in the market was already gone. Which I explained all the reason we should be expecting this market to take out liquidity before we start taking it to the downside. And the market played out the way we explained. Currently, we have one position running, one already closed, because we caught this movement from this place, the first one here, right? Put our stop loss above here, and the targeting here to take out this low. And the other one, we caught the movement here, put our stop loss above this structure, and targeted this low, which was the last low we had here. And why did we do that? Okay, let me delete this and explain a little, which you could also learn something. Let's go to 1 hour. Um, when we look at this, we had this particular move and we have other block here. And here we placed our markets here, our order here. Why? Because we had this internal structure that needs to be taken out before continuation to the downside. And that was exactly what the market did, giving us that movement here. And we targeted the low, which is this one, and put our stop loss above here, and we got about 5 to 1, okay, 3 to 1 risk reward rather. And that's it. We still have current position running. So now what are we to expect from this market this week? Now looking at this, since we already have a break of structure here, right? We already have break of structure here. And this break of structure is valid because on 15 minutes, we saw that closure of candle below. As you can see, it has been closed below. Now look at it. It has been closed below. So we have a good downtrend right now. And whenever market is in downtrend, we look for downtrend. Trading against the trend is very risky. So we are looking for down movements. Now looking at this, remember what I said a few minutes ago, that if the market is going to the upside, if this high did not sweep any liquidity before this break of structure, the market will always come back to take it out before continuation to the downside. So now, since we have this, and on 1 hour, as you can see, this break of structure happened without this high sweeping any liquidity. So we are expecting this market to take out this high here, right? On continue moving to the downside, or when we go to 15 minutes, we can see that in 15 minutes, we have a just little tiny structure there, which is good for our buyers. And on 30 minutes here, let's check 1 hour. On 1 hour, we have a very good order block there, right? This order block that is yet to be filled. So we could see a potential move here and the market continue going to the downside. Or since this liquidity grab here is not kind of clear on 1 hour, the market could decide to take this out, right? That high out before continuation to the downside. So we should keep that in mind. If you want to open a position in this market, you are expected to put your order here, right? Let me refine this a little. You are expected to come to this place your order from this order block and put your stop loss little above this structure, right? This is just 30 pips risk, and first profit to target is here, which is 2-to-1 risk reward. Then the second profit should be here, which is 4-to-1 risk reward. So this is what we're expecting in the market. And there is something I want you to take note of. On 4 hours, we still have another order block above here that is yet to be mitigated, an extreme order block. So you should be looking for confirmation below here before entry, because the market could decide to come and fill this order block before continuation to the downside. So remember, trading is reactive, not predictive. So try to understand what the market is doing, or wait for change of trend or shift of in trend before you start looking for movement to the downside. So, but in generally, this is what we are expecting on GBP USD. Then on gold, on gold, I have a very good setup on gold, and okay, let's go there. When you look at gold, you will discover that this market is in a very big uptrend, very good, healthy uptrend. Why is it healthy, or how to identify healthy trend? Now, when you look at this, whenever the market breaks any high, it is always retested. So this gives us room to say that this is a very good uptrend. So having that in mind, so which position are we looking for? We are looking for buy position to continue moving to the upside. Then what are we going to do? Now, let's quickly go down to 1 hour. In my previous video, I explained all the reason we should wait for this movement to the downside before we start seeing any potential move to the upside. Now, remember, this is a valued break of structure here. As we are seeing, this is a valued break of structure. And after this break of structure, as you can see, this low created here before another break of structure did not take out any liquidity. Now, remember, whenever the market is moving to the upside and the market creates this low without sweeping any liquidity before creating a high, it will come down to take it before continuation. Or whenever the market comes here, goes up, now created this low, right? Create another one, create this low before continuation. Now, look at this. The market will come back to take out this particular low before continuation to the upside. When you look at this, I want you to understand something. This is internal structure created before breakout, right? Why this is a structure created after breakout. So I want you to always understand this. Anyone that you see is always wait for sweep of liquidity before you start looking for entry. So that was what we saw here on gold that made us to say so. So after this sweep of buy side liquidity, the market created this low without sweeping any other low and created this high. So since this low did not sweep any low, we were waiting for the market to take it out. This low did not take any low. This low did not take any low. And remember, whenever we have some structures here, after the market breaks out, all the internal structure will turn to liquidity before another continuation to the upside. So let's go down to 30 minutes. Now, looking at this place, we can see that the market, after this huge retracement, taking out these lows, right? So this is now our very strong low. We never wanted to see market go below it. Then this low created this swing, created this move to the upside, created this low before this. This low did not sweep anyone. This low did not sweep anyone. So we were waiting for it to sweep liquidity before we start seeing continuation to the upside. And coupled with that, we now have a very powerful valid order block here, which we saw on 30 minutes, and we are waiting for market to come and mitigate it. So we placed our buy order here, right? Put our stop loss here and targeted here. So we still have this order running. We are waiting for this market to take out this high before we start looking for any other buyers or any other change of trend. So this is what happened on gold. So what do we currently have now, or what are we going to be looking at here on gold? Now, looking at this, the market has been filling every order here. So here we have two significant order blocks. Number one is this, and second one is this. So why these order blocks? You will understand when we go to lower time frame. So these are the two order blocks we have. Let's go to 15 minutes to see if we can get more clear view of what is currently happening in the market. Now, looking at this, okay, now we can actually see that there is already sweep of liquidity here. And this happens to be our strong low now, sorry. This happens to be our strong low now. So, which the possibility of market coming to this place before continuation to the upside is now very rare because we already have that sweep of liquidity. But nevertheless, always remember that the market is reactive and not predictive. So we could also see that here before continuation, but I doubt the chances of it coming here before continuation is rare. So what are we expecting this week? Since we already have this sweep of liquidity and we are having this very powerful structure here, and this low did not take out any low before taking out the buy side liquidity, which has given us a strong confluence because this low needs to be taken out, which means there is possibility of this market to come to this particular place. You put your stop loss here and targets the first take profit should be here, which is about 4-1 risk reward. And remember, we have a high that needs to be taken out, which is this. So we are expecting the market to come to this place. Your first take profit should be here, which is for almost 5-1 risk reward. But your last take profit, second take profit should be at this particular place. So this is what we have here on gold this week. And on USDJPY, let's quickly go there. Remember, this is gold and the setup for gold this week. We have USD JPY, and in my previous video, I explained all the reasons why we should be expecting the market to come to this order block and fair value gap. Let me quickly delete this for for the chart to be a little clear. Now, remember what I said a few minutes ago, that whenever the markets keep breaking structures without sweep of liquidity, the market will come and hunt those lows before continuation. Now, as you can see, we had this low that didn't sweep any liquidity before this. We had this low that did not sweep any low before creating this higher high. Okay, let me identify them, right? The first higher high occurred here, and the market came here creating this low. This low did not sweep any liquidity. That low created another what high, and have had another low here without sweeping any liquidity. This low created another high at this particular what place, gave us this low without sweeping any liquidity and continued moving. So immediately the market came down, right? Taking out this, which I explained. Now, currently, we have a market which has entered inside the fair value gap, right? And before that, in my previous video, I explained the reason why we should be expecting this move to the downside. Why? Because we have a very good order block on daily charts that the price supposed to come to fill. And immediately the market tapped in here. I told us on one is there to be looking for change of character at this particular place to continue taking your market to the upside. Remember, higher time frame gives us clear view of clear direction of the market, while lower time frame gives us clear view and entry points. So immediately we saw this, we moved down to 4 hours. Then there is a order block here that is yet to be filled, which I expected the market to come to it, but the market didn't come to that order block. Rather, it used the fair value gap. Now, the market could decide to come to this order block before continuation, but let's go to lower time frame to see if there are valued order blocks that we could see better entry. So let's go to 1 hour and see. Okay. Now the mark, yes. Oh, very good. We already have sweep of liquidity. Let me delete this for clear view. Now, as you can see, this market here created this high, right? Swept this buy side liquidity, now came back, giving us this low. And remember, this low created another higher high, which is breaking of another structure. And this low did not sweep any low. So what we expecting? We are expecting it to come down and sweep for the market to take out this low before we start looking for any potential move to the upside. And that's exactly what the market has done. So possibility of market coming back to this place now is rare, despite we still have a valued order block here that the market is yet to be mitigated here. But because of this sweep of liquidity, the market might not come to this place this trading week. So let's drop down to 15 minutes. On 15 minutes, okay, the market is now creating series of higher highs and higher lows. As you can see, we have this higher high here. So we are expecting the market to take out this low, which the market has taken out. But regards to that, we have a very good order block that is yet to be filled. So we should be expecting the market to come to this order block before move to the upside. So you could place your order here, and your first target should be this particular place, right? Which will give us about 5-to-1 risk reward. And second take profit should be here because we are expecting this high to be taken out. I am looking at this high for the market to take it out. So this trading week, we should be waiting, looking for opportunity here. Once market comes to this place, look for change of character here before it starts looking for opportunity to the upside, because the market could continue going to the downside to take it out before continuation to the upside. Remember, market is reactive and not predictive. So this is our bias and our analysis here on USDJPY, and on GBPUSD. This is our setup for the week. And when you go to gold, this is also the setup we are looking at for gold. So if you have not subscribed, remember to subscribe, like, share, so that whenever we drop top-down analysis, you'll be the first person to get it to maximize your chance of winning in the markets. There's no matter whatever the market does, on Wednesday, I will still be updating you people on current situation of the markets. Have a successful trading week, guys. Thank you.